Hey guys, welcome back. I mentioned the other day that I purchased some Opendoor while there was a nice sale going on Friday as the market took a dip. It was kind of remarkable because it took this nice little dip right around 11 o'clock as I was recording one of my videos, so I got a great price on that Opendoor stock. Such a great price that I was thinking, wow, I really need to look into this more. If you're not familiar with this company, my son made a video about this in the fall, so I'd encourage you to go back and look at the Opendoor video that he made. I just want to touch on a few things to update you a little bit on Opendoor. If you're not familiar with Opendoor, they are an internet-based platform where one can literally sell their house online over the internet as a contactless way of doing it without having anybody walk through your home except for you using your digital device to be able to show them the contents of your home. They also use some other data to be able to formulate an online cash offer to you, and then you choose the closing date, and all of the closing is done digitally. This is a company that can truly be disruptive for the home selling market. You know, we look here at Amazon in retail, we look at Uber in transportation, and Carvana, of course, in online auto sales. Opendoor is the leader in this area of home sales, and right now less than 1% of home sales are performed online. So there is a massive opportunity waiting for Opendoor. Now, they're not in a lot of markets around the country yet. This map shows you the areas where they are. I listened to their conference call from Friday, though, and one of the things they mentioned is that they plan to double that this year. These are the areas that they're looking to expand into this year, and in fact, on the conference call, the CEO said that eventually they will cover about 70% of the homes within the United States. And should they ever cover all of the United States, we're looking at about 5 million homes sold per year with about $1.3 trillion of potential market. Again, feel free to take an opportunity to go back and watch that presentation on Opendoor that my son did earlier in the fall. Let's just cover some of what came out of their fourth quarter earnings as well as the conference call. Of course, they went public via a SPAC merger with Social Capital in December of 2020. Let's just jump down to the quarterly report numbers here on the earnings statement. So the first thing we'll notice is in 2019, they made about $4.7 billion. That became $2.5 billion in 2020. Even a higher appearing loss or greater appearing loss for the quarter, where in 2019 they had about $1.25 billion, and in 2020 we're only looking at $248 million for the quarter, which begs the question, what in the world happened? Well, what happened was they didn't sell nearly as many houses. And why is that? Well, this is definitely COVID-19 related. The number of homes that they sold in 2019 was just shy of 19,000 versus in 2020 where they were just shy of 10,000. Why? They noted on the conference call that for 2 of the quarters in 2020, they stopped acquiring homes. And it wasn't until the fall of 2020 that they started gaining inventory again. So the homes that they were able to sell were just the homes that they had already had within their pipeline. That drastically decreased their inventory of homes. In the fall, when they started buying homes again, well, that inventory went up, and so their sales definitely started to increase as well during the fall. Nevertheless, they made some significant improvements in their business despite the drastic decrease in revenue. One of the things that we can see here is that for the fourth quarter of 2020, their contribution margin was 12.6% versus only 1.5% during 2019. Now, that contribution margin takes into account what they get from the sale of the house versus what they call their holding costs. And those holding costs include things like insurance and maintenance and repairs, etc. So that if we look at the raw numbers, their contribution profit per home sold during the fourth quarter was $37,000 versus only $4,000 during the fourth quarter of 2019. The company is not making money yet. If we look at their adjusted EBITDA, we'll see that for 2019, they lost roughly $18 million. And if we look at 2020, they lost just shy of $100 million. Their cash on hand at the end of the year is $1.5 billion. Other highlights out of the conference call and the statement that they put out. They tripled their inventory from Q3 2020 to Q4, such that at the end of the year, they had 1,827 homes within their inventory. In the fourth quarter, they generated 15.4% gross profit margin and 12.6% contribution profit margins. In February of this year, they completed an $860 million public offering. That then is in addition to the $1.5 billion that they already had on hand. So you can see the amount of cash that they have available to grow and to buy homes with. Now, they didn't feel comfortable giving guidance for the whole year. They did give some quarterly guidance, and they did talk about the fact that much of their revenue will be coming in the back half of this year. Now, Opendoor certainly has made their name by making home selling very easy. It can all be done with clicks of a mouse button within minutes to days. However, they spent a fair amount of time on the conference call also discussing how they are advancing their business into the home purchasing, that we're talking from the perspective of a buyer, not the company purchasing, so that they can act in many ways like a real estate agent, even allowing people to have all cash deals with Opendoor fronting the money. So some of the things now that we'll see on Opendoor are title and escrow. We're talking about home loans. We're talking about, of course, buy with Opendoor, even list with Opendoor. Rather than charging 6%, they'll charge 5% as a commission. When will this company become profitable? Well, we're looking at roughly 2023 before their adjusted EBITDA becomes positive. In 2023, they're looking to be selling just shy of 38,000 homes. And looking at year-over-year growth between now and then, we're looking at 39%, 79%, and 57% potentially. I was reading an article the other day that was talking about Opendoor and comparing it essentially to Amazon 25 years ago. The author's argument was that millennials don't want to have to purchase homes the way that their parents and grandparents did. They like being able to do their business over the internet or with an app, and that particular author saw this really as the wave of the future. We certainly have seen other areas of our economy shifting rapidly. We think about ride sharing, we think about Airbnb and VRBO. We think about online car sales, and certainly it's not beyond reach that people will decide that they want to be able to sell their home, especially if they need to move quickly. This is a way to get a quick cash offer, settle quickly, and be done, be able to move to wherever it is you want to go. Now, initially, I thought that Opendoor was going to be able to accomplish that by essentially lowballing people on their offers. But that is not necessarily the case. This slide here says a lot, showing the average price, in their example of the home being somewhere between $303,000 and $342,000, with Opendoor making an offer of $317,000. Then they go into fees and closing costs and the amount of time that things spend on the market, and the fact that 20% of transactions fall through during real estate transactions. The Opendoor program starts to become much more attractive, knowing that it's simple, that it's certain, that it's fast, and it's completely contactless if you're looking for safety during the time of a pandemic. Like I pointed out earlier, less than 1% of home sales are done online. So even if they can get their penetration up to 4 or 5%, we're looking at 4 to 5 times the revenue. And they're getting even better at the profit margins, so I expect that their profit margins will continue to increase. That's it for this video. If you enjoyed it, please give us a thumbs up. We'd love to have you as a subscriber. And until next time, enjoy your investing.